What is the market telling me this week? Welcome to the Nick Rutherford Report. And the market is either going to take advantage of you or you are going to take advantage of the market. So hit that like button, leave me a comment, share this with someone who would get a lot out of it, because this is the place to be for the financial news that matters for your net worth. Remember, every investor loses money, but what separates the best investors from everyone else is when you lose small, and when you win big. And let's see what the market is telling me this week. Let's get to it. I love this headline. 1 million square foot office building in the center of Philadelphia appraised for 25% less than it did in 2021. And why do I say that I love this headline? Because there are some crazy things that are happening in the market. And this just goes along with my trend that there's a segment of the market that's going to do great and has been doing great, and it will probably continue to do great, unless, of course, the jobs crater. And there's also a segment of the economy that is just doing terrible. So this just confirms what I've been saying every week on the show. And I want to just point that out because I love to confirm when things are right. And when things are wrong, I love to get confirmation that I'm wrong so I can change my mind and change the things that I'm investing in, because that's what will make me money. So I'm looking at the data to let the market tell me what to do. So this just tells me real estate is not a place that I want to be in until, of course, it gets so bad that people are just begging to sell their real estate. But I don't think we're quite there yet, and the data is going to let me know. I think we need a serious recession first. So next I want to point out Target. Now Target absolutely soared on earnings. And why is this so interesting? It's interesting because it's telling me, well, maybe we're not quite at a recession level yet, because Target is still making a lot of money. And I hope my audio is coming good because it's starting to rain a lot here. So I'm just going to keep going and go to the next article here, because uranium stocks rise after the world's largest producer cuts 2025 demand. Why am I pointing this out? Well, this is very interesting to me because I've been invested in this sector for a long time. In fact, if I get this up here, I invested way back here when it broke out of its flat to down trend that it had been in for years and years and years. So if the news is correct and it's confirming that there's going to be less uranium in the future, well, that probably means the miners that I'm holding on to are going to make a lot more money, or people are going to perceive that they make a lot more money. So the data tells me that this is going to go higher. Of course, I'm not recommending entering here because one of my core principles for success that I believe in is buy low and sell high. And this certainly is not low. Is it high? I don't really know. Maybe it's somewhere in the middle, but the news and the trends are continuing in the way that should push this market higher. Do I know what will happen next? I have absolutely no idea, but I know the price isn't so low as it was when I entered. It doesn't look low to me anymore. It could be expensive. It doesn't seem super expensive because there's not a frenzy around it, but I always want to stick to my principles, because over the long run, buying low and selling high is what makes me money. So all I'm doing is pointing out that that trend still seems to be intact, and it's one that I've talked about in the past. Now, this is a very interesting article that came up. Wall Street outraged over the latest screw up by the Biden Labor Department. Apparently, they didn't release the jobs numbers on time, or the revision to the jobs numbers, and then they gave it to some people, they didn't give it to other people, and that caused the market to go haywire for a bit. This is not really that much of an important piece of news, but it led on to the most important piece of news so far this week, except, of course, the Fed, which we'll talk about in a minute. So the U.S. jobs revised down by $818,000 in an election year. Shocker. The worst revision in U.S. history. Now, this is extremely concerning to me, because if the labor market gets worse, then I'm going to be freaking out, because all of the conditions will be in place that typically are in place during a recession. So here's this interesting graph that you can see. Just the revisions are so much lower than what they've been saying. But I do think there's some good news in this piece of news. And I know that might sound absolutely outrageous. And the good news is, well, the labor market has been sucking, but many of the companies that I'm invested in are still making lots of money, and I'm getting that from the data. So yeah, the labor market has been bad, but there are companies that have been doing great. And if you're invested in ones that have been doing badly, you've been in the wrong investments and you haven't been reading the data. So my point is, I always want to be invested in things that are working. And things like data centers and NVIDIA building more and more chips, well, the labor market isn't as important. Of course, it's going to be important if it gets really bad, but in the meantime, it's not really that important to chips that Microsoft are buying for its data centers today. Therefore, earnings are going up. Therefore, stocks are going up. So this is just an interesting piece of data that I want to point out. So what happens next and what am I doing about it? Well, there's some incredible data that has come out now. Powell has completed his pivot. So gold, stocks, Bitcoin, bonds surge. And there are some interesting comments that he made that I want to point out. The cooling in the labor market conditions is unmistakable. So he said something to that effect, assuming that quote is correct. I'm going to be watching the entire video after I post this update for you. But my point here is that I'm not even sure his tightening has had an effect. Maybe it's had an effect on bonds and real estate, but it seems like the fiscal was really overwhelming everything. And a lot of people tell you, all right, the jig is up, he's doing the cut, and that's why I want to look at this. So this is the 10-year Treasury constant minus the 3 months. So this is the data that's telling me what to do. And typically, if you look at the last 1, 2, 3, 4 recessions, they've come when the yield curve was inverted and then uninverted. So right now we are extremely, extremely inverted, and we're not even close to uninverting yet. So until the yield curve inverts, I'm not worried, as long as the data is telling me that the companies I'm invested in are doing well, and then for me, everything is fine, because typically when things go well, the price goes up. And yes, of course, the data could change and I could lose a little bit of money from now, and the data could get worse and then I would sell out and I would have lost money from the peak. But remember, one of the principles that I really like to think about is how much money did I have a few years ago? And if I'm up from there, well, then I can sit back, I can relax, I won't freak out, I won't have an emotional tie to the market going up and down from here, and I can make the correct decision. And for me right now, that's to be long, because the data is not telling me to go short yet. And of course, tomorrow the data could change, and then it would be time to freak out. But until then, like, look at the yield curve. The calamity always comes after it uninverts. So I'm not worried today. Will I be worried tomorrow? Maybe, and then I'll adjust accordingly. So I want to quickly look at the market, because the market is all of this data combined and telling me what the market is thinking. And it looks to me like the market is on its way to new highs. It could also look like a topping pattern here. I want to say the labor data is really, really concerning. And remember, we talked about the other week that 4.3%, I think it went up to. Just going off the top of my head, I would have to check specifically. But it did trigger that rule, the SOM rule, that says in the past, when the data hits this side, all the conditions exist for a recession. So that's one of the possible outcomes. We're going to talk about the possible outcomes as we get to the end of this video. But I just want to look at some of these other things, like Bitcoin seems like it's consolidating. And this is typically the time, if you study history to predict the future, that Bitcoin consolidates and then goes up. So if history repeats, I'm expecting Bitcoin to go up a lot from here. Now, it also wouldn't surprise me if the labor market gets worse and things go way down. But that's what I'm going to closely watch, is the data. And then the data is going to tell me what to do. Because I've been long since 2022. And if I go right back here and zoom this chart out. So I sold up here on January 18th. My recession indicator flipped off for me. And I sold some of my positions and attempted to hedge. It kind of worked and it kind of didn't, but it allowed me to mitigate some of the downdraft in the market. And then I re-entered here in this area and in this area when it had gone down and the technicals looked like it was a time to re-enter. And then the data has just been getting better and better. So I don't have to make the decision to jump in or out of the market because I'm already in the market, and it looks to me like it's going up right now. But it also kind of looks like a topping pattern. Now, my recession indicator has not told me to freak out yet, but we are really, really close, and I'm really concerned compared to any time. Like, I don't want you to hear that and say, oh, Nick is just really concerned. Well, I was concerned a few years ago, and before that, I wasn't concerned at all, and then I was concerned right before the plague, and then before that, I hadn't been concerned at all since 2016-ish. I'll get this, let me zoom this out here. So the last time the data even possibly slowed down, it slowed down here in 2015 and 16. It began to slow down in 2019, and then it slowed down in January of 2022 here. So what's my point? When I'm saying I'm worried, concerned, and bearish, that's like happening a few times. It's not something that I repeat over and over again like many people who go on here. So right now I'm concerned, but I'm still long because the data hasn't tipped all the way over and we haven't got confirming market action. Now, if I'm looking at NVIDIA, NVIDIA looks like it's either going to new highs or we're doing a massive topping pattern. So I'm very concerned. But there is some hope here, and I think where NVIDIA goes, the market somewhere will go. But we have kind of like a cheat code. Now, I could be wrong here, but if we look at TSMC, Taiwan Semiconductor's earnings, they report their revenue, their net revenue here on a monthly basis. And in July, they hit a record. I think I mentioned this last week. So if they're selling more and more chips, what do you think is going to happen? Well, I'm predicting that NVIDIA is going to do very well and that all of the companies buying NVIDIA's chips are buying them and everyone's doing well because the money's parade is still happening. Now, if this was going down, the revenue here, I would be very concerned. But because of this piece of data, it tells me that there's more and more sales of these chips happening. So until that slows down, that whole segment that is driving much of the economy and much of the S&P 500 is probably going to continue. I don't see an indication that it's going to change yet until the labor market significantly breaks. And we're watching the data closely here so that we can be near the door and get out if we need to. But I'm not concerned as of today, August 23rd. Now, will I get concerned on Monday with new data? Of course, it might happen. And I always want to keep my mind open and flexible to changing. Because if the data changes, I'm going to change. And right now, I don't see anything terrible yet. I see that maybe we're in the last phase of the bull market. Now, of course, I could be wrong, but that's just where I'm seeing it today, and you're going to have to wait till the update next week because I let the market tell me what to do in real time. So don't worry if you're not caught up to it. Just stay with us and we'll get caught up to it. So what's next? This is just what do I see that's going to happen next. I'm going to make my prediction, but it's going to be a twofold prediction, just thinking through what are the possibilities. Well, one of the possibilities is that employment gets worse and the market grinds lower. But there was a theory floating around that extra bump in unemployment was because of the hurricanes. So I'm watching the rate of change of unemployment really closely, and I'm modeling that using an algorithm and calculus to tell me how fast it's changing and when those conditions equal the same conditions that happened during the last crisis. And we're very close, but we're not quite there yet. So we got to see what happens over the next few months. So that's scenario number one that could possibly happen. Not saying it's going to happen. I'm just saying this is what I'm watching. And if this does happen, I'm going to be selling my investments, going to cash, shorting the market, buying short-term treasuries. And then if the market continues to go down, I'll wait that out and then eventually buy back in when everything looks attractive and when everyone is freaking out the most. So that's one scenario. The other scenario is everyone's freaking out now and the fiscal just keeps propelling the market higher. Right now, this is my base case just because it's the opposite of what everyone thinks is going to happen, and there's a precedent from it because of all of the massive amounts of money that got flooded into the system. We're going to look at a chart of that next. So these are the two possibilities that I see. And right now it seems like that because if you look at the CHIPS earnings, they're up on a monthly basis. We're getting monthly revenue. They're higher than ever. So this tells me we're going to get some good revenue going and the party's still happening. So I know there's a lot of uncertainty, so I reserve the right to change my mind. But let's quickly look at the fiscal. So this is the fiscal chart that George Robinson sent me, and he's been talking about this. I'm giving him super props because I think he was the only one on the internet in 2022 just about that was saying the market was going to go up and we weren't going to have a recession, and boy was he right. And this is the reason. The reason is all of this money. This is the blue line. This is the fiscal spending into the economy, and you can see that it spends wildly during the plague and then it pushes up GDP here. Whatever color this is kind of orangish. I'm a little colorblind. And then the fiscal comes back down, it slows down, and then it goes up again. So I'm waiting for this second little blip of fiscal here to come through in the economy, set everyone off sides, and have stocks go up, up, up. That's just what I'm thinking. That's my base case. If unemployment gets worse, I'm going to change my mind and I'm going to freak out. And you'll see me freaking out. I'll be telling you that I'm freaking out, and I'm hoping it doesn't happen, but I'm ready for it. This is just playing through all the probabilities. So I want to talk about quickly one last thing. I'm starting a beta test of my research service. I'm creating an independent research service just because I'm constantly doing this research for myself. It helps me invest, and I need a way to manage my family's money because I don't trust Wall Street analysts. The fact is they always get it wrong. So I'm going to be publishing my research for myself and any of my subscribers who want to take a beta test of it. What it's going to include is just my monthly research report, daily access to our proprietary recession detector indicator. This is the algorithm that I'm running just on the economic data and millions of market data points that's attempting to measure when we're going to have a recession. We do that by measuring the data, having a back test of when the same economic conditions existed in the past that led or that may or may not have led to a market crash, but they existed and then there was a market crash. So if those same conditions exist, the algorithm is going to freak out and tell me to sell just like it did on January 18th of 2022. Next, I'm going to be doing live weekly Q&A. So we're going to get on Zoom or whatever platform I figure out, and I'll be available for a live Q&A. Then we're going to do our 10-year market trends that will change everything. These are the trends that I think are shaping investments, and they're shaping my investments, which is why I have a model portfolio to take advantage of these. These are the same ETFs that I would tell my sister to go invest in if she said, Nick, what do I invest in? And I'm going to have a private membership form. So I'm just throwing that out there as a beta test. If you want to take part in this, email me directly at nick@rutherfordwealthreport.com. You can see it written right on there. That's how you can reach me. I'm just going to see if some people are interested in this beta test and roll forward with it and get my research. And it's going to help fund this. It's going to help fund what I'm doing and get you even better research. So it's going to allow me to do more videos, better research, and help you get a leg up on the market. So we're starting. Go ahead and email me if that's something that you're interested in. And what happens next? We're really going to see. We're going to look at the data. And that really comes down to employment getting worse, market grinds lower, or the fiscal propels the market. And as of today, I think the fiscal is going to propel the market, and the yield curve hasn't inverted yet. So I'm watching the yield curve, I'm watching the jobs, and I'm watching the fiscal. We're going to see what happens next week, but right now I'm long, and my money is where my mouth is. So hit that like button, leave me a comment, subscribe to this channel. I hope you get a lot out of it. And when new data comes up, I'll post up a new update. Have a good weekend. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.